On Midcap Microscope, we turn our attention on an indirect play on the automobile space as well as on the home appliance space. The stock on our radar is Bhansali Engineering Polymers. The stock has had a wobbly past 1 year or so, but on a year-on-year basis as well, it's more or less unmoved, even though we have seen selling pressure in the last few days. Now, the potential growth in the Indian middle class spending in terms of home appliances as well as in terms of automobiles, that's what provides visibility in terms of ABS resins, and that's their key product. Now, from the automobile side of things, its key clients include the likes of Bajaj Auto, Hero MotoCorp as well as TVS Motors, while LG Electronics and Samsung India, they feature in their list from the consumer electrical side of things. Let's quickly run you through the dynamics of the so-called ABS market. Now, it's a duopoly market with BEPL as well as INEOS having nearly around 60-65% of the market share, and 30-35% consist of imports. But these dynamics have changed in the last few months as domestic companies' capacity utilization levels have moved up and imports have reduced, particularly from Korea, as they have found their way into the Chinese markets. And that's particularly good news for the domestic players, as now they are operating at near optimum capacity utilization levels. But the kicker comes in from the fact that in fact the spreads have been gradually moving up and they've nearly doubled from the recent lows, and now they're nearly at the highest we've seen in the last few years. Now, important to note that in fact, the spreads are moving higher because the prices have improved, but input costs have been lagging. And in a good year like FY18, where the company has managed to do double-digit margins as well, and with the current spread at what it is standing at, well, it'll be interesting to see if the next couple of quarters are good for the company, given the fact that the spreads have moved up as well. Though revenue growth, that will depend on capacity addition, as the company is running at optimum capacity utilization levels. One clear positive though is the balance sheet, and the company is debt free. They're sitting on cash equivalents of nearly around 65 crores or thereabouts. And the other positive is that the promoter, they've been showing the faith. They've been increasing their holding in the company from around 50% to around 56.5% in the last few years. The company is run by a father-son duo who decided to forego their 5% commission in terms of profitability for the last year, that's FY20. But what doesn't appeal to shareholders is the fact that the company is perceived as more of a family business. The other problem is that yes, the promoter has gone ahead and increased stake in the company, but there's no significant large fund holding in the company. Keep an eye out on this one, BEPL. That's the stock that we're covering today.